Welcome to Wyckoff Power Charting. I'm your host, Bruce Frazier, and today we're going to have a discussion about point and figure analysis. We're going to do point and figure studies, and just to be a little different, we're going to actually do these together. And I believe that the more exposure, the more time spent on point and figure analysis, the more comfortable we all become with it. At first, it's very odd, unusual type of charting that befuddles students. And after many, many years of teaching this, I believe that the best way to really become capable with point and figure is just to immerse yourself in it. Now, Wyckoff uses horizontal point and figure analysis, which I'll show you. There is also the vertical method. Both are great, but in Wyckoffian terms, we use the horizontal method, which goes back into the 1800s and beyond, most likely. It's a great method, and it requires some skills to really develop the eye for being able to tell where the count is, where to start it, where to end it. And if we do our work right here today, you should become a lot more comfortable with that. So we're going to have a lot of fun with this. But first, an announcement. Roman Bogomazov and myself, do a Wyckoff market discussion every Wednesday afternoon at 3 p.m. Pacific time. And we are going to have a free webinar on May 1st of the Wyckoff market discussion, and we'd really like you to join us. We're going to cover the markets, we're going to cover trade selection, we're going to cover trade entry topics. We do this every week. We rotate through different subjects. It's just a great place for the Wyckoff community to show up and be together and work on becoming a more masterful Wyckoffian. Also, the Wyckoff market discussion, May 1st, there's going to be special offers. And so come attend for free and see if you'd like to become a part of our community. And we will look forward to seeing you on May 1st. You can go right to wyckoffanalytics.com, Wyckoff market discussion, to register. Or the easy thing to do is there's a link on my most recent blog where you can go there, just click on that. It's very easy to sign up. Okay, so this is a chart that actually was first constructed back in early January, the middle of January, where we could see an accumulation being completed on an intraday basis. Every move, every trend is an effect that was preceded by a cause. And a cause is a horizontal period of time in trading, which we often refer to as accumulation. We consider it to be a process of absorption. At the conclusion of an advance, we may see reaccumulation or distribution. We'll talk about all those things today. Here you can see that there is accumulation taking place on this 30-minute chart, which right here, this accumulation formed very quickly and produced a whopping 4,000 Dow points of count in a very short period of time from around December 20th and up into January 3rd, 4th, somewhere in that area. And this is the count that it produced, a count of 26,075, 27,012, and using intraday data. Now, this seemed at the time like pie in the sky. It was a huge count. And here we can see that this count, after a robust rally, was completed in February. So here we can see that this trend channel that formed had a throw over at the conclusion, which we would call climactic. And so this climactic action was then followed by a period of weakness, a reaction, which took it back into the channel. Now, this isn't necessarily bearish that it fulfilled this big count and then showed some weakness, because what often happens is that you get a period of trading range, or what we would often refer to as a range-bound market. So this is sort of a trifecta in point and figure analysis, where we fulfill the point and figure count. It's at resistance, in this case throwing over the top of the trend channel in a climactic action, which is a trend line throwover. And so, and then also resistance formed way over here on a part of the chart that we can't see at this time. Okay, so now looking at this chart again, here's the period that we just looked at, which was this throwover and an overbought condition, which produced a range-bound market. And we can see that taking place here, where the reaction all the way goes all the way through the trend channel and becomes oversold below the channel and produces a rally. But we expect this to be range-bound. So we have a range-bound condition here, and this count right here is on a 60-minute chart at 3-box reversal method, and the box size is 5982 ATR scaling. So we can actually count this on the 60-minute, and we get a slightly different count from the one that we got on the prior chart, which happens all the time, where the counts will vary by a little bit just because of the ATR scaling, etc. And so we have a count that goes to 25,483. This is 21 times 3 times 5982. And that's going to give us our count, which is about 4,000 points. And so this, we would then draw a line, which you can see I'm not very good at. And here we have a count. We flag a count off of 2 points on the chart, off the low and off the count line, which is right here. And so this gives us a range, or an area, where we would expect the market to go to. In this case, it's 25,483 and 26,439, so roughly 1,000 points of range. And so this is, oh, I did this wrong, 25,483 is right here. And then 26,439 is right here. So this is our where we would flag the count. Well, look at how this works. And so we're just going to ignore this. And this completely did a wonderful job of capturing the range-bound area that we've been in. Now we've slightly thrown over the top of this, which often can be part of a range-bound condition. So we'll move on and see what happens, or see other counts that might help us with this. But here we are, we're in this, roughly in this range. Point and figure chart did a wonderful job of telling us the potential for this move. Now, this is a much smaller time frame. This is 5-minute data instead of 30-minute or 60-minute data. And I am a big fan of doing intraday point and figure charting. And that's a big part of the reason that I wanted to show you these charts. I want to give you a sense for how useful they can be to you in your trading tactics. So here I'm going to show you this area, which is a period of accumulation. And right here is where you pivoted up and out. The Dow pivoted up and out of this trading area. And so we count from the last low, where the Dow stopped before it turned up into this wall that took it out of the range. And then what we do is we go back to a period where we saw supply, which was climactic in nature. And you can see that after a big decline, here's a big fall down to the low. And so this becomes our count area. Now, it's possible we could extend the count out to here at some point, but this appears to be our count. So we count from where the rally started to where the decline effectively was ending. This area across here is 27 columns, and so we would go 27 times 3, which is the reversal method, times 16.52, which is the ATR scaling, and this is the scaling over here on the right and on the left. And so this gives us a count of 26,712, 26,927, which is higher than the count that we just looked at, but we're counting a different area. And as a matter of fact, let's go back. This is the area that we're counting right here. So you can see it's really quite small on the larger 60-minute chart, and we get much more detail when we go to 5-minute, where we can see a lot more. But look what happened. Look how beautifully this worked. So we have this count. This count takes us up to this area. We're almost there now, and we very easily could be into the area of this count very quickly. And this area is a range-bound condition, and that's this area right here. And we can draw resistance at this climactic surge. We can draw support on the automatic reaction down to the bottom of the range. We expect this market to be range bound for some number of days to weeks, because this is a much shorter time period. Now we have a count. And so this is the low here, and we count across. We can see here's the climactic surge of supply that ends the decline here. Now support is found, and then at the very end, it's a little hard to see here, but you can see that there's a spring type action that then reverses, and look at this beautiful wall that's built, often called a catapult wall, which runs this up and out, and here's our count. Now what's really interesting here is that look at how the two counts confirm each other. So this gives us an added confidence that this could be a good target for the Dow to go to, even on the shorter term time frame. So look at what a wonderful trading tool this is in the shorter time frame. So I'm a big fan of intraday charting. And remember that to have access to the intraday point and figure charting engine, become a member of StockCharts.com, because this is all available to members, and it's hugely valuable in my humble opinion. Okay, so here is a chart, 15-minute basis of IWM, which is the ETF for the Russell 2000. And here again, this is a shorter time frame. This is late March down here, and you can see that there's a count. Look at this big wall down, lots of supply into a decline, which pretty much concludes the decline. There's one more push down, attempt to rally, and it comes down one last time before it comes up and out of the range. You can see that this count, which is 3-box reversal, so we have 2, 4, 6, 8, 9. So 9 times 3 times 0.32, which is the ATR scaling, and look at the count that we get. So beautiful rally in the intraday in the IWM, and then it runs up, and you can see that as soon as it gets into the range of this objective, it then stalls and forms distribution. This distribution, look at this big wall of supply as prices fall out of this area. Well, it's possible that two things are at work here. One is this could be reaccumulation for another run up, or it could be a bigger distribution for a bigger decline. If it ends here and it falls out of this range right from where we are, it has a countdown to 153.60, 152.32 area. And so this could be the extent of it, but we're not out yet. And so there's the potential for more work to be done. This is a really interesting case study. This is HCA Healthcare. This was actually a chart that I constructed in January, end of January of this year. And we could see that there was a large point and figure accumulation area, which I wanted to capture but also we wanted to use point figure to help us to understand where markets will stop along the way, where they'll rest, whether they need reaccumulation, or whether there's only part of this whole count that actually is accumulation. And so here, this yellow box represents a segment. We always count big accumulation areas and distribution in segments. So here is a off of this low, the point we start from, we count from right to left, we can see that there's a big wall of supply, and this is where we would typically identify a segment ending. So here's the start of it over here. Here's the end of it over here. And then there's this bigger segment. And so I'm going to focus my attention on this. This count over here is the larger segment, but you'll see that we have a line of thinking that we're pursuing here. And so this count takes us, this segment takes us to 148, 155. This is daily data, 3-box reversal, traditional scaling. Everything over $100 is 2-point scaling. Everything under 100 is 1-point scaling. So we take this count across here, and we have a count that goes 148 to 155. And you can see that there's a reaccumulation count over here that we take, and this count goes up to 144 at the extreme. And you can see that it runs right up into this 144 area, and there it stops. In fact, it goes to 146. Remember, this is 2-point scaling. The actual high was 147.42, and the count objective was 148. So it got about a half a point, a little more than half a point away from the final objective, and that's really good. That's a great hit. But notice this. Notice that this did produce, these two counts produced weakness in HCA, and this falls off. Now remember, this is through January 30th, and so we want to take a look at what's happened since that time. But notice how these point figure counts did stop the advance. So what we would be looking for is there a range-bound reaccumulation, or is there something else going on? Okay, so here's HCA, and this is weekly, and this is up through the 17th of April, and you can see here that this looks more and more like distribution. Well, this rally here, this large decline here is into the end of December, when the whole market was weak, and so it did not produce trouble in the relative strength line. And then there was a rally up, and this rally was very robust, and you can see that the relative strength line actually rallied with HCA on the way up here, which shows that it continues to be leadership. Well, thereafter, notice what happens is there's a huge bout of weakness. All of a sudden, it just envelops HCA, and it becomes very weak. Look at these two big red bars as it goes down, consolidates those, and then breaks its long-term moving average. Well, this is sudden and sharp. Well, notice the relative strength really falls apart here. So something's at work, and we want to explore this. Here is the U.S. healthcare providers index, which is the industry group, and this is even weaker. So notice the weakness that comes into the end of the year. A rally that's pretty good produces a rally to a lower high in the relative strength, and then just outright failure. And look at the decline in the relative strength. All of a sudden, there's a change of character in healthcare providers and in the whole healthcare index sector. And notice how this relative strength is just on a tear downward. So this is very interesting. Well, let's explore this. Here is a daily vertical chart of HCA. And we're deviating a little bit from the point and figure work, because I really want to show you this because it's such an interesting and useful case study, is that we can see here back to October of 2018, we can see a buying climax. So we see initially some preliminary supply here, buying climax that slightly goes through. Look at the volume, it's quite high. into the push into the climax, and then a steep automatic reaction. So we have a buying climax produces the resistance line, automatic reaction produces the support line, and we would expect that in the case of HCA, that it would stay roughly range bound by these two extremes or parameters, which is support and resistance. And you can see that after a secondary test, this is phase A, there's an upthrust in phase B, which produces a really dramatic decline on very high volume. Supply is present here in this stock, but this is weakness that goes into the end of December. The whole market's weak. And you can see that HCA is actually a little weaker when you look at the relative strength on the way down. But then HCA has, off of the support area, a really good rally, and this rally goes right back up to the highs, and the relative strength is rising. This is a very strong market, so the relative strength rising in a very strong market really shows that HCA continues to be leadership. Well, here, resistance produces a stopping action, a pause. There's a little bit of a climax right here, and last point of supply. And then notice what happens next, which deviates HCA from the market, which is a big bout of weakness. And look at the volume come in. So this is how on our toes we have to be in markets, because rotation can occur quickly, suddenly, unexpectedly. So here HCA's leadership, and then all of a sudden it becomes a big laggard. And I believe that this relative strength signature actually kept institutions, investors really at ease, thinking that HCA was continuing to be a good leadership position in the market. Well, notice the rally that comes next. So there's a rally that comes back up into what we call another last point of supply. The volume is very high. Well, this is supply. Notice the volume that comes in the last couple of bars right here. This is supply where institutions, large composite operator types are selling stock, and HCA can get nowhere near the resistance line that's overhead. And so then it falls again, it falls easily, attempts to rally. We'll compare this rally to this rally. This rally is even poorer quality. The volume is even drying up further, which means that there's really an absence of good demand to drive prices up. And then look what happens next. These two LPSYs represent excellent areas for us to sell stock. For people that like to short sell, and I don't necessarily recommend that, but this would be the place to execute positions. You could put on a position here and put a stop above this high, or slightly above this high. But also this LPSY, if you could see this, I think this would be very difficult to see, is a place ideally to short stock at the top of the range, or to sell your long positions, and then see what kind of weakness comes in. Well, this weakness is just profound. And so here is the relative strength, which is the big tell, is notice how it drops very sharply after being such good leadership for so long. And then in this area, which this is a redistribution right there. And so you can see there's a redistribution type structure, and there's a downward tilt to the relative strength, which shows weakness, very poor rally, and then notice what happens next is just a wholesale collapse out of the distribution area, which means that this is all distribution. And this decline, even though it's likely getting near oversold, because look at the sheer amount of volume, I would not attempt to step in front of this freight train, but it's possible that there could be another attempt to pause and maybe even rally upward towards this old support area. And this volume suggests that there's going to be an attempt to stop this on the way down. And you can see in this distribution schematic, you can see that all the elements are here. And so you can compare this stock to the elements, and you can see the last point of supply in phase C is a rally off of support, which goes up. Well, that's exactly what happens here. And then there's 2 more LPSYs on the way down, which are here and here, and this is phase D, which is the beginning of the downtrend. So this is a really interesting chart. Okay, so to conclude our studies, we are going to have a discussion on some point and figure charts. And let's start by looking at FMC Corp, which is a chemical company. And what I like to do is look at the point and figure charts first. Wyckoff analysis involves using the vertical chart and the point and figure chart in unison with each other. And the vertical chart is going to be really useful at identifying where to enter, where to place stops, etc. But the point and figure chart is going to show us these causes, these structures, where we can see accumulation taking place. So I'll go through a lot of charts, point and figure charts, and I will just be looking for these accumulation structures, reaccumulation structures, and distributions, and identifying causes, because they're really best seen in a point and figure chart. So here we're going to do this one together. This is again FMC, and this is the point from which FMC begins its rally. Now there could be more count here, and this is a tricky place in that often it'll get to the top or resistance area and have to come back in and spend more time. So what we try to do is we try to find a real robust change of character in the way the rally is occurring, which often can be seen better on the vertical chart. But for today, we're going to look at just point and figure. So this is where we're going to start our count. We're going to count over to here, because look at this big wall that's formed. That's a huge bout of supply, which finds support at the bottom of the range, which shows large hands, large interests are supporting the stock and buying shares. And you can see this spring right over here, which produces the big run up, which starts the rally. 13 columns. This is traditional scaling, which under 100 is 1 point. 3 box reversals. So we go 13 columns times 3 times 1, 39. So this is our count, and this gives us a count up to from the low and from the count line gives us a count up to 99 to 106. So that's currently at 81. So there is potential in this first segment of the count here. Now let's count the second segment. So we have a working count that gets us up to 99 to 106. Now we have a second count here, which actually is 29 columns times 3, which is 87, which takes us up to 147, 154. And so this count, we would flag these, we would put the number as you saw in the prior charts. And so there is a substantial accumulation count in FMC, and I would recommend that you go out and look at a much larger time frame. This just goes back to the beginning of 2018, but go back and look at a much larger period for FMC. And let's watch this closely to see if it attempts to come back in again, which could produce a bigger count potentially, or it may just be endlessly range bound. Okay. All right, so we're going to end there. We'll do more of this, and I've enjoyed our time together talking about point and figure, and have a great week, and I will see you next time.